Oliver, we have a near impossible task before us. We have to make a 3-minute video about British insurance interesting. What are we going to do?
Well, don't think of it as a 3-minute video about British insurance. Think of it as a video about interest rates, which is interesting for everybody who's involved in investing. This is the story of RSA, the British insurance company, and how it's really suffering from low interest rates that everybody else is having to deal with. And it's had a pretty tough time of it.
So how do low rates, which are a global phenomenon, come home to roost in this little British insurance company?
Well, for RSA, like for a lot of insurers, it hurts them in two ways. The first is investment income on their portfolio. All insurance companies have big investment portfolios of their reserves, and they make money out of the returns on that. RSA says it will generate about £380 million of investment income this year. Last year it was about 440. The year before that it was 500.
So this is a painful process.
So a painful process. The other thing low interest rates do is they push other investors to look for yield in all kinds of new markets. And one of those markets that investors are going for is insurance. So there's a lot of capital coming into the insurance sector. That's making people able to write a lot of new business and pushing down premium rates, which also affects returns. So both sides of RSA's business are suffering from lower interest rates.
So is this a basket case of a stock then? In this environment, in this rate environment, do we just stay away from insurance companies?
Well, it's an interesting story, RSA. It was in a lot of trouble a couple of years ago. They had accounting problems in Ireland and various other issues. Stephen Hester, who used to run RBS, the bank, he came in, he was appointed in February 2014, and he's been doing all the right kinds of things. He raised a lot of money in rights issue last year to solve the capital position, so the capital is now okay, but not fantastic. He's been cutting costs, he's been sharpening up the underwriting process. In short, all the sorts of things that a new chief executive of a troubled insurer should be doing, and he is improving things. The critical question, though, is whether all of his actions can counteract the problems caused by low interest rates, and in particular in relation to the dividend, because RSA used to be a great dividend play for investors. For between 2010 and 2014, it yielded over 6%. These days, that kind of yield is unheard of. For 2016, the yield is 3.5% because they've had to cut the dividend because of all these problems. Now, the question is whether in this tough interest rate environment, Mr. Hester can improve RSA enough to be able to increase the yield and offer shareholders the sorts of dividend that they used to enjoy.
Oliver, I think that was a little bit interesting. Thanks very much.